Income Marketplace is soon to enter its 5th year of operations, while the platform appears to be stronger than ever before. Considering key metrics such as default rate or active portfolio growth, Income established itself among the best choices for investors in the peer-to-peer environment. Despite its self-imposed burden of being the safest platform for investing in loans, which has been backlashing at times, there is no denying that Income probably had its final breakthrough in 2024. Today, we're gonna take a closer look at the current status quo of Income Marketplace and why the platform presents a great opportunity to achieve double-digit returns. To start off, let's take a look at my personal portfolio on Income Marketplace and which auto-invest settings I am currently pursuing. At the end of October, my outstanding portfolio on Income has been 14,295 euro, with 12,000 euro being deposited since April 2022. This corresponds to a total return of 13.45%, which is calculated on a volume and time-weighted scale. In absolute numbers, this makes Income the third biggest position in my personal portfolio, whereas the total return is the best among all of my actively managed platforms. In terms of lender selection, my focus has always been on 3 core pillars consisting of Dana Rupia, ITF and Hovi. What all those lenders have in common is a certain amount of market experience, a stable financial situation, double-digit interest rates and loan terms of up to 12 months, which is therefore meeting all the criteria for my personal selection. The Spanish company Ibanca has recently been added to my selection as well. My acceptance of loan terms with even up to 24 months is mainly due to their strong profile consisting of a solid track record on other platforms, decent profitability and their jurisdiction in the European Union. The fact that double-digit returns can be achieved on Income Marketplace is mainly due to the above-average portfolio quality of their lenders. While Income manages 17 million euro of investor assets, only 108,000 euro from Brazilian lender ClickCash are currently in debt collection. This corresponds to a ratio of 0.63% and is therefore more than competitive compared to other peer-to-peer marketplaces. If we take a look at the almost 4-year-long history of Income Marketplace, there have only been 2 more problematic cases on the lender side, namely ClickCash and Vivos. The Brazilian lender ClickCash was suspended by Income in November 2022 with 182,000 euro of outstanding receivables at the time. Due to irregular repayments from ClickCash side, Income decided to bridge 5,000 euro on a monthly basis if ClickCash fails to fulfill its obligations. As a result, Income has already repaid 40,000 euros out of its own pocket, which partially limited the resources to promote and scale its own platform. For a young and yet to be profitable company, clearly a strong sign of commitment which shouldn't be taken for granted. Recently though, Income communicated a 4-month pause to its bridging payments as a fundraising on ClickCash side might resolve the issue sooner rather than later. The second issue happened to be with Mexican lender Vivos. At the time, 2 million euro of investor funds have not been repaid in time, either because Income was unable to allocate the funds correctly or because the funds have been blocked by third parties. After the repayment has been processed in several installments, all outstanding claims were ultimately repaid by February of 2024. The platform's lender issues have always had a certain level of attention as Income has been marketing itself as the safest platform for investing in loans since its inception. Although this somewhat exaggerated and misleading marketing claim can surely be criticized, the overall picture is clearly displaying that Income's risk management approach is more than competitive in the peer-to-peer environment. This includes the platform's softer dialogue approach with its partners rather than submitting to external voices which immediately wanted to impose legal actions against affected debitors. This approach might appear that income would be unable to leverage its ability to act, but the results clearly speak in favor of the platform, at least until now. Next up, let's take a look at the financial stability of the platform. According to the latest annual report, income managed to double its revenue compared to the previous year, whereas the loss has roughly been halved to now 590,000 euros. In order to reach break-even, income is currently calculating with an outstanding portfolio size of around 30 million euros. Looking at the trajectory from the past 12 months, profitability might be in reach by the end of 2025. According to the statements from the past, the income shareholders are prepared to finance the platform's growth with equity until the break-even point has been reached. To exceed the threshold of 30 million in investor assets under management, income will need a demand from investor side as well as sufficient supply from their lenders. Although income has had more supply this year, the marketplace has recently onboarded 2 more lenders to enhance diversification for investors. IBANK offers installment loans secured by cars, which are advertised with a 12.5 interest rate, a buyback obligation, and loan terms of up to 37 months. Based on the outstanding portfolio of 18 million euro, IBANK is currently the second biggest lender on the marketplace. Here is why IBANK appears to be a stable and solid choice for investors. Firstly, due to its previous experience in the peer-to-peer landscape, where IBANK has always honored and met its repayment obligations on time, even in more challenging times and crises in recent years. The strong track record as well as the good portfolio quality are 2 good reasons why IBANK has been awarded with the second lowest junior share among all lenders on income. The jurisdiction in Spain, which is associated with the European Economic Area, clear regulations and the absence of currency fluctuations can also be highlighted positively. The profile is rounded off by the financial stability of the lender, whose numbers look absolutely fine. The main KPIs for revenue, profit, equity, and cash flow are all positive and have increased compared to the previous year. At the same time, also the balance sheet did not reveal any surprises either. The second addition is UK lender Sandfield Capital, which is specializing in civil litigation funding. This seems to be a somewhat new and emerging niche, which has also been on display with Nera Capital on Mintos. In the case of Sandfield, the company is working closely with a few selected law firms, which in turn help their clients to pursue legal claims which otherwise might not progress due to financial issues. In order to minimize the risk on the part of the law firms, only promising cases are accepted, which results in a proclaimed rejection rate of 68%. Another level of security is provided by an external insurance, which is triggered if the litigation fails. For this reason, the law firms only accept clients who can provide an appropriate ATE insurance. So far, Sandfield Capital managed to facilitate 14.2 million euro of loans with its business model. To fuel the growth even further, Sandfield is now offering interest rates of up to 13.5% on income with terms of up to 15 months. Income Marketplace continues to establish itself among the best peer-to-peer platforms in Europe. While the early years have been characterized by big expectations, IT problems, the first collection processes, and a lack of loan availability, the tide seems to have turned positively in 2024. Since the beginning of the year, income has increased its assets under management from 9 to now 17 million euro. This is primarily thanks to an increasing loan supply, which can now consistently meet investor demand. With IBANK and Sandfield Capital just starting out, the trajectory looks promising to continue the growth path beyond this year. At the same time, income has also showcased visible progress with the problematic lenders. The Vivos issue was settled in February this year, and a final solution with regards to ClickCash seems also to be on the horizon. A collection rate of less than 1% is a great testimony to the platform's risk management, while being a key reason to ensure double-digit returns for investors. If income continues this way, the platform is most likely to break even by the end of 2025, which could provide yet another boost moving forward. The positive development is rounded off by income's strong presence in the public communication with its investors, which happens on both their Telegram chat or in the monthly Income Insights podcast. If you want to receive a detailed platform breakdown with additional information, then please head over to my blog review, where you can find also a sign-up link if you want to boost your returns even further. Please comment below the video what your personal view and assessment of Income Marketplace is and where you see both advantages and disadvantages. That's it so far for the video today. Thanks so much for watching until the end. Please do me a favor and consider subscribing if you want to receive more videos like this in the future.